look out my window.
Hello traders, Gary Wagner here. Approximately 11:15 a.m. in Honolulu, Hawaii. Thursday, the 4th day of August. And this is the daily report for gold. Today is a day I think we all will remember. In a major sell-off, the stock market following suit from the European stock markets, which were also drastically under pressure, lost approximately 5%, closing down about 500 points today. Gold, if I have ever seen a roller coaster ride in my life, I was on it as I watched the market play out last night. Incredible. In fact, as I was watching the market trade to new highs, there begin to have what I'll call some writing on the wall. And I guess the best way to look at it to start is going to be a 3-minute chart, just to give you an idea of the activity. The market was fast and furious. There's absolutely no doubt about that. But as you can see, as we came in and we made these series of new highs, and this is up around 1682. This is going to turn out to be the contract high, of course, is spot gold, and this is the asking price of gold. I saw the market meander around. The area, I guess, that most confused me was as we were trading last night, you could see that we did hit that double top. But once the market began to come down, I did have some genuine concern about the stability within the market. Now, I did go ahead and raise our stops. I did raise them actually to the low of the day, but my sentiment was we were in at 1547. By moving our stop to 1647, we were able to lock in $100 profit on the trade. Now, does it make sense that as we had this market go down, that a typical flight to quality, a safe haven investment such as gold, should have actually held or performed well? On the surface, that might be the case. However, when you consider that many professional traders were liquidating positions to simply come up with cash, gold is one of the more liquid investments. And therefore, what we saw was a mass liquidation across the board. As I said, currently trading just off the lows, is still trading down about $12 on the day, 1648. The low on the day, I believe, is about 42, right in that area, 44, 43, right in that area itself. Traders, we are looking at a daily chart. This, of course, is our chart with our Henkin and our extensions. These have been our targets that we have been shooting for. So one of the other reasons that I looked to move the stop up last night was that we perfectly came to the numbers we had been anticipating. The fact that the market traded to 1680, as you can see right here, is no shock or surprise to any of my subscribers. This is a price point we were absolutely looking for. I personally never ever anticipated the market coming down as quickly as it did. But, in fact, I was looking for a top when the market hit that particular price point. As a matter of fact, I am going to present a link to you today. This is my most current commentary in Kitco. It was actually written as we were making all-time highs. And towards the end of the article, I simply state, is it time for a correction? Are we going to witness a dip? And what was compelling in terms of evidence was a simple study created by Channel Lines off of the weekly chart, and that's what we're going to look at as our final chart of the day. Traders, we are simply looking at a weekly chart right now in which I have added a set of channel lines. The channel lines, of course, in an up market is really a guide or a pathway. We're simply creating them by drawing from a series of lows to determine our tact or angle. As you can see, that's quite clear. You get some very strong high correlations on these bottoms. The tops, of course, you'll do the same thing from top to top. And this particular lower line is simply copied and then pasted and then matched. Now, as you can see, it's quite clear that when we look at this market from the low, it will tend to trade to the top of the channel. From the top of the channel, it will tend to trade back down to the bottom. This is a standard market. A standard market in a bullish trend will do that. However, what I noticed that was different last night was that we got to the top of that particular channel line, and my sentiment was that there is a high probability that the logical assumption is that the market should trade within the channel lines, not break out very far. In fact, it did break over at some point, but as you can see, from the bottom to the top, this particular top-heavy channel line is where I drew the conclusion that there was a high probability that we might be witnessing a dip. I never anticipated the activity that we witnessed today, which was globally a very, very tough day for most traders. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Friday for the weekly wrap-up. Bye-bye.